Hi, I'm Nick Langley. At Rare, we specialise in investing in listed infrastructure across the globe. Infrastructure are those physical assets that provide services that are essential for us to live our lives. No matter if markets are in boom or in bust, we generally interact with these essential services every single day as our demands for gas, water and electricity remain fairly constant. Some infrastructure is regulated, and the regulator determines the revenues. If it earns too much, then the company has to return some to its customers. But if it earns too little, then the company is able to increase its prices. This leads to a fairly stable cash flow profile over time. As inflation is frequently taken into account by the regulators, increases in prices are often linked to inflation, and so these assets also act as a good hedge for inflation. We also invest in what we call user pays assets. Revenue depends on how much people use the assets. As economies grow, these assets also typically grow. For example, as more people use more mobile phone data, we see mobile communication towers adding additional capacity to meet this demand. Infrastructure is a market that's growing astronomically. In the developed markets, we need to refurbish a lot of our existing aging infrastructure and also invest to meet future needs. In emerging markets, more and better infrastructure is needed as economies grow and people become wealthier. We're seeing increasing demand for airports, roads, electric and gas networks. With pressures in government budgets, we're also seeing government ownership of infrastructure and their willingness to fund infrastructure reducing over time. This is leading to more opportunities for private capital in the asset class. At Rare, we focus on listed infrastructure. These are publicly traded infrastructure securities, such as the shares of electricity, water and airport companies. These securities enjoy the benefits of the infrastructure asset class. That's long-term stable cash flows, lower correlation with other asset classes, income and inflation protection. However, securities also give us the benefits of the listed markets, such as liquidity and lower fees. Investing through the listed markets also provide us with the flexibility to take advantage of market movements and invest where we see value. Our name, Rare, Risk-Adjusted Returns to Equity, illustrates our belief that investing is not just about the best returns, but it's also about managing risk in portfolios. One point we feel strongly on is exactly what is meant by infrastructure. When we started Rare back in 2006, we felt the existing infrastructure indices were flawed in numerous ways. For example, including stocks with significant commodity price risk, which we don't see as a true infrastructure risk. And so we set out to create our own universe of infrastructure stocks with these flaws removed. The universe we created is called the Rare 200 and contains the 200's largest and most liquid stocks that meet our definition of infrastructure. It is from this universe that we select the stocks that make it into our portfolios. We focus solely on investing in listed infrastructure, meaning that we don't have the distractions of other asset classes. We have the largest investment management team of the peer group, and we have offices in Sydney, Melbourne, London and Chicago. Our team includes individuals with experience across the whole spectrum of infrastructure investing. That includes government and regulation, corporate and infrastructure operations, debt and equity financing, unlisted infrastructure, and mergers and acquisitions. Infrastructure is an asset class you're going to hear more about over the next couple of decades as demand and spending greatly increases. Our passion for the asset class, along with the deep and varied experience of our team, sets us apart from our peers. We believe this, combined with our proven investment approach, will enable us to successfully meet our clients' needs as we aim to achieve excess risk-adjusted returns to equity over the long term.